Hey everybody, welcome to Stock Trading Pro. My name is Pete Renzulli. Today we got a really big breakdown. As we do on every Monday, we're going to break down the entire week, what we're looking at from a stock perspective, but we're going to work our way all the way down to the market and work our way all the way up to individual stocks. I'm going to give you the list of the best stocks to buy now that I'm looking at right now. If you choose to take a look at some of those yourself, I hope so. Actually, we're going to put you in a position to have some really solid ideas that we're expecting follow through on this week. But more importantly, we're going to start out by breaking down the market, what we're looking for in volume on the market, how the stock prices themselves are giving us really, really big clues for the short-term future direction. And the one big monster price that is a focus for me right now, combining volume and combining price. So we're actually going to break down everything. We're going to get into breaking down the market. We're going to work through the sector rotation spreadsheet, and then we're going to work all the way down through the newsletter for Monday, which is my actual game plan for today, Monday, January 23rd. But more importantly, I might be filming this on Monday, but it's the game plan for the entire week. So we have a lot to talk about today. It's very, very exciting. So stick around, be right back. Okay, so thank you for joining me here today. I really, really appreciate it. We got a bunch of stuff to cover today. Hey, LJ, how's it going? How are you today? John, good morning. Good morning. So we're going to start out with something very important. Obviously, what we're about to talk about is for educational purposes. It's up to you to make that final decision. It's my mission to help you make better decisions. So we really want to break down the market, which means we're going to work our way through the stock market power pyramid, which is the way I prep everybody during the day. So if you're not familiar with what that is, this is what it is. And we actually try and visualize that if you look at the bottom of the pyramid, you want the most solid foundation behind your idea. So we're actually going to start out with the market today. We're going to work our way up to the sectors, industry groups, and then individual stocks. So what's going to be kind of fun about today is we're not only going to be talking about new stocks to buy, stocks that are in my game plan. Remember, this is for education. You pick which stocks you want to trade. We're also going to talk about some possible industry groups that are showing relative weakness that you could possibly use as a hedge, short selling or buying puts. If they go down and the market goes down, you'll be protecting profits on those long opportunity stocks that you own. So using that hedging strategy can kind of help you hold good ideas. We've had some really interesting stocks kind of come off the mat recently, Bitcoin being one of them. That's going to be something interesting. I personally don't trade Bitcoin. I want to be very clear about that. I want to see a little bit more regulation. I want to be super transparent about that. However, I absolutely trade Bitcoin related and crypto related stocks every day. So we're going to talk about coin today. A couple of other ones that we haven't traded in a while, but they're kind of coming off the mat as well. Bitcoin mining stocks. So we got a bunch of things to talk about today. But I think we're going to start out first. I really just want to show you the newsletter. I want to work our way through because we have a big discussion about volume today and the big ripping number one price that we're going to be paying attention to in the S&P 500. So we're going to map that out for you. We're going to give you the 4 different setups in volume that we're looking for, and more specifically what they mean, because that's really what's more important. What do those setups mean, and how does that translate into trading? Once we kind of break down the market and what I'm going to call today the lunchbox, the cost of lunch indicator, once I show you that today, you're never going to go to lunch and look at lunch the same exact way. You're actually going to be constantly looking at the price of lunch and how that could potentially lean into new buying opportunities in your favorite stocks. So what we're going to do is we're actually going to break this down. And by the way, if you want this document, you can actually click the link below in the video. I want to give you the document to start the week out because it's kind of important. All right. So we're actually going to zoom this in a little bit. And you know what? Let's actually start over here with the sector rotation in the market. So you can actually see we like to focus on the last 4 weeks. And by the way, what I'm about to show you now is kind of like a peek behind the curtain. This is actually what I do for our community every single day. It's like I said, it's my job to help you make better decisions, but those better decisions work with better data. And actually understanding how the market's looking, what that means for sector rotation. Sector rotation leads into industry groups and then ultimately leads to the best stock picks. It's a very, very simple strategy, but you need to learn how to use it over different market conditions. Super easy to trade when everything's going straight up, right? Not much to think about, but we really haven't been in that right now. So I want to walk you through what that looks like and how that's playing into ideas. So what we like to focus on is the last 4 weeks of data. So we're kind of setting up where sector rotation is right now and how that's leading into new stock picks. You can see we actually had a couple of really good weeks. Last week, although the market closed really, really strong, and we actually, let me drop this in here for a second. We actually had 2 really good volume days last week above the average of the last 30 days, and Friday closed really strong. You can see we're kind of neutral right now. Now, what's kind of interesting about that is all of the bearish headlines that we're having right now, both on YouTube, every place you could possibly look at a tweet right now, everybody talking about the big recession that's coming. We're in the recession already. If you think we're not in a recession right now, I'm going to prove it to you when we read this document, because there's all the talk about where we're going. Let's talk about where we are and what the stock market is actually telling us. As of right now, as of this moment, so if you're a regular viewer of the channel, you know that we do not like to predict. Predicting is wrong. I don't know any way to say it. Look at Kramer and everybody else who's very, very well respected, Kathy Wood, all of that research, all of that really good track record in the past. There's plenty of times where those predictions just don't pan out, but that's real trading. They're not doing anything wrong. I'm not doing anything wrong. Everything that we do in trading is about taking the best data you have right now and then making an assessment of where you believe the market is going with that data. It doesn't make somebody wrong. It makes that particular moment in time either follows through or it doesn't. So again, if you're new to our channel, the biggest thing that I want to teach you, really the biggest thing that I want to get across is it's okay to have losing trades. We don't want them, but they're a part of what we do. Losing trades are a part of an edge. An edge means most of the time. So as long as you have losing trades on your best ideas, that means over time, you should be okay. It's when you throw in those garbage ideas that you know you shouldn't take, that's the stuff you got to get out of your mind and get out of your trading. So what we're going to talk about right now is the fact that as of this moment, the market with all of those negative headlines, you can actually see it right here, is not going down. The market is speaking. We have to remember that with all the stuff that's going on right now with the economy and interest rates and all that kind of stuff, it's kind of all priced in. If we kind of zoom this out a little bit right now, this is 2021 versus 2022. 2022 has already priced in those 3/4 basis points, the 50 basis points, and now we have another Fed meeting in 10 days, 10 or 11 days. We're going to get to that in a second. So really what we're doing right now is I just want you to keep things simple and just really think this through based on when I walk out of the house. What does gas price look like? What does it look like to go to lunch? What does it look like at Costco? We're going to talk about the price of lunch indicator right now. All right. So let's kind of keep it simple, thinking it through. It's all common sense. You just need the price action to validate what's actually happening. And right now, as of this moment, stocks are not going down and they're rallying on strong volume. That could change sometime in the immediate future, but we only have the data that we have right now. Right now, the data, and again, you can see you can see it on the chart over here. We are holding the bid. Now, the big thing we're paying attention here is this big 400 number in the SPY. We're going to break this down for you. So let me just minimize the screen right here, and we're going to go over here. And I want to just walk everybody through this. The tug of war between the bulls and the bears got intense last week, and I want to show you what I mean by that. This is the 30-day average of volume. And look at 3 out of the 4 days last week were heavy volume, right? 2 down, 1 up, and a really strong showing by the bulls on Friday. And if you didn't happen to see what that looked like on the intraday charts, just to give you some context, that's what the market looked like on Friday. So when that happens on bigger volume, especially after 2 days of selling, something interesting is going on. And you got to head into the weekend saying, wow, okay, I gotta really step up a little bit. All right. So let's put that into context. I'm going to give you the 4 different types of volume to pay attention to. Okay. And let me say hello to Franz. Hey, Franz, how's it going? Thanks for joining us today. I really appreciate it. All right. So heavy volume days in both directions tell us the next big move is near. So this is really what you want to be paying attention to. You need to track volume on a daily basis because accumulation, distribution, fuel, exhaustion, these are the kind of things that we're looking for. All right. Churning on heavy volume, typically known as accumulation or distribution, leads to a new bias. So let's really think about why the stock market moves in the first place. It's because somebody with deep pockets and research has changed their opinion and they start doing something about it. And they put lines out in the water and they start to buy stock or short stock. And maybe they're dumping supply or maybe they're creating new demand. But what we're seeing right now is volume is kind of the receipt. If you can imagine going to the store, you spend a certain amount of money, everything that's listed on there, and you see how much you spent, right? That's what volume tells us in the market. So keep it simple, keep it common sense. Volume equals the amount of money spent to create those charts that we're looking at. Now, when you see a lot of volume churning, so in other words, heavy volume, but price action is kind of staying in the same place, that means that there's a real battle between differing opinions. And basically what ends up happening is one finally gives up and says, all right, you got it. And they kind of step out of the way. So that's what we're really looking at. And that's what we're going to really map out right now. So if you can take a look over here, these 3 days plus the previous Friday, very, very important. We actually had consecutive Fridays kind of bounce up. All right. It's critical that you track this metric both for the market and for stocks. I'm going to show you what that actually means in a second. Let me actually pull that in right now, kind of really do this. I'm going to pull that in right here, and I'm going to actually add that here. So let me just do that right there. So I'm actually going to highlight this because I want to show you not only are we doing it in the market, but we're also doing it in individual stocks. So every day we run scans for average volume and then what is doing double the average volume. So now we're going to talk about why. This is actually what's more important, right? Volume tracking comes down to just 4 individual scenarios: fuel, exhaustion, accumulation, and distribution. Now, here's the important part, and I'll actually make this a little bit of a different color so that you can actually make sure you have that on there. Fuel starts a move. Exhaustion ends a move. So let's actually talk about those two. Fuel and exhaustion are individual candlesticks that have heavy volume. Now, what matters and how you tell which one of those is about to change price action, fuel typically starts a move. So if we could visualize a big green or red candle, but let's use green as an example, a big green candle breaking out of recent price action that also has big volume. So we purposely labeled it as fuel. Now, here's the key. It's not just the candle with big volume. So when we're scanning for those candles every day, like I just showed you here, these stocks have double normal volume. Now, what matters is where that volume is happening. So if we get a large green candlestick with big volume, we immediately need to say, where did that happen? So if it's coming out of, you might call a tighter consolidation that's going on for a while, and we're going to be looking for this in ExxonMobil in just a minute. I'm going to show you just a second. That means fuel is starting a move. Exhaustion is that same exact candle, a big green candlestick with a lot of volume, but after an extended move. Now, when you get a move that happens to the upside, I'm going to keep using to the upside because it's just easier for us to wrap our head around. You get a big volume move to the upside after, let's say the stock has gone up. Let's keep it within the shorter time frame. Let's say the stock has gone up for 2 weeks and it's really, really obvious and going up. And all of a sudden, out of nowhere, you get this one really fast move to the upside, expanded volume, closes on the high, and you're like, wow, that means this thing is going to keep going, right? Well, you have to think about how the stock market works. And let's use Rob as an example. Let's say Rob owns a hedge fund, and let's say Gardner also owns a hedge fund. Rob has actually been pushing that stock up. He's the only person buying the stock for the last 2 weeks. Every time he stops buying, the stock pulls back, so he knows he's the one who's holding the bid up, right? But now all of a sudden, he's got 1 million shares left, and he knows that he's the person pushing that stock up. So Rob calls up Gardner and says, look, hey, Gardner, I got 1 million shares left. I just got to get rid of this order. Will you buy it off me at a certain price? So all of a sudden, they're pushing the stock up for the end of that order. You see this big, giant green candlestick and a monster volume spike. Now, most retail traders think, wow, this thing is going to the moon. Look at what just happened. But you're not putting into context what happened prior to that. So where the volume happens matters. So what we just walked through, some people call it a capitulation print. I call it exhaustion. Some people also call it a cleanup print. It's perfectly fine. It happens every day on Wall Street. It's just 2 people negotiating shares, and boom, you see it on the print. So exhaustion ends a move typically in 1 big giant candle. Sometimes it happens in 2. Now, I want to be clear about this. If you happen to own a position while you see exhaustion, it does not mean just get out of that thing. It means something changed, and it's kind of like an alarm where like something changed. I need to now wake up and maybe move up my trailing stop loss, maybe take some off the table. But you want to still give it a chance, because what ends up happening is that big volume print happens, and then it kind of like floats a little bit higher, before somebody else either steps in or before it reverses. Okay, so I just want to keep walking that through for you. Again, you can download a copy of this below. I like to give it to everybody to start the week to really get your head going. And we've got a lot of stuff to cover. Okay, so talking about fuel and exhaustion, now we're going to talk about accumulation and distribution. If fuel and exhaustion happen very quickly, the other two take longer and form a trading range. So you can see a longer time frame trading range where churning happens with heavy volume. All right, but the important thing is where the volume happens that matters, which brings us to reading the tape and the current price action. Okay, heavy volume bullish days specifically are what we're talking about right now. The market produced 7 above average volume days recently, 5 of which are bullish. Again, read the tape, don't guess, don't predict. Let that receipt tell us how much money was spent and how is it spent. Okay, so the deep pocketed institutions continue holding the bid. So remember, if you're a new member of our community here, and by the way, if you're not, please do me a favor, make sure you thumbs up and subscribe so you get updates, right? We have to talk every day about the research that you're doing every day, and it really comes down to scanning for something specific. So when we are looking at scanning for something specific, we're looking for a push and we're looking for a pause. If a stock pushes up, that's where we get paid. It's during the pause where a new good entry kind of resets and gives us that opportunity to buy. Now, the reason it resets is because somebody with deep pockets is holding it there. So I'm sure you've actually seen stock that have gone straight up and straight down, and you're like, oh man, right? It's the push, the move after the move, that is really the one that we're bidding into, because the first one was interesting. The second one is positive feedback. Positive feedback means it pushed up, and then the positive feedback means it's holding the bid. So there's volume holding that. Now, we all know that as a bull flag, right? Bull flag or bear flag, whatever you want to call it. You could use Fibonacci retracements, however you want to look at it to map that out, right? But the bottom line is this. When somebody is holding the bid, despite all of those negative headlines that we're seeing right now, that's got to be something that you're paying attention to. And that's why we're going to tie this now back into what we're looking for and want to see, or we're game planning in the S&P 500. Okay, so let's keep mapping this out. All right, so the deep pocket institutions are holding the bid. We just talked about what that meant. For every bearish headline that we're seeing right now, stocks are not going down. You really can't argue that right now, no matter what you're talking about. The SPY continues to hover near the important 400 level, the level that breaks the 2022 downtrend. So that's essentially what we're talking about right now, right around this 400 level, which is the downtrend for all of last year. So I want to be clear about this, and we're actually going to map this out right now, okay? With the next FOMC meeting scheduled for January 31st, as of right now, things are getting interesting. Stocks don't trade in the past. They discount into the future. This is a very important concept for us all to make sure we wrap our head around. That's why they go up or down. We're paying for future cash flows. So what's my game plan, right? I'm actually going to bold this. This is really the most important thing to think about for the coming week. It's looking more like fuel through that vaunted 400 level and positive signs from the S&P, from the FOMC next week. Throw in the current earnings season, and if you want to get a copy of this document for yourself, we actually have all of the earnings that are coming out this week. You can see it is a really, really big week of earnings. So throw in, we're hovering near the 400 number. We're hovering near the big downtrend from 2022. We're hovering on heavier volume, and all of that is happening with the bearish headlines and the market's not going down. Throw in the FOMC. Again, we're going to talk about what that means in a second, and earnings that are coming out right now. My word, we have something really cooking underneath the market right now. So let's continue to work our way through this. Okay. All right. So what's the game plan, right? Throw in earnings season. We have the makings for a surprise Q1 rally that could happen fast. So again, the fast part of it is very important. All right. Now, again, you can download a copy of this for yourself. There's an entire list of all the sectors, the industry groups, the stock picks, even the stock pick that I have for today. So I want to make sure that I set the stage for when you read this document, you understand how to use that document with all of the ideas. And again, this is the research that I provide for our community every single day. I want to kind of help you set the week up and have your mind thinking a certain way during the week, because there's no news this week. Carrie in our community today posted that there's no news, no Fed, none of that stuff other than the earnings this week. So this could be a really interesting week of trading where there's kind of like nothing in there to like mess up the works. All right. So let's continue. This is the game plan and the thought process, and then ultimately the stock picks that are in my game plan for this week. Okay, I really want to just, my biggest mission is to really get you to the point where you think about, okay, maybe if I just spend 15 or 20 minutes a night or in the morning, whenever you have that time, just kind of putting this together and say, okay, that happened. What does it mean? And then when you answer that question, what does it mean? That's really what starts to formulate how you plan to get involved with the market. Now, what's interesting is a lot of people kind of do that subconsciously, but then they don't actually kind of like map it out, put it on a notepad and say, this is what I plan to do if that happens. Just take that one extra 15-minute step and say, this happened. What does that mean? And then what do I plan to do? You start to do that. All of a sudden, your confidence in the stock market skyrockets because now you're no longer waiting for something to happen. You're literally saying, when that happens, then I plan to do something. And if that does not happen, then I'm okay. I'm going to protect my capital until what I want to see is actually there. So now let's kind of dive a little bit deeper into what exactly that means. Okay. The bears are hoping at this point it's not over. The bulls are showing sign of life. And again, that's what we're talking about in this volume over here. Okay. So remember to look both ways. This is a very big point here, right? Consecutive Fridays with heavy volume closing near the highs is something to note. Now, again, we're just making notes. We're making observations. We're building that argument to determine if we should be accepting risk right now. So remember, again, if you're a new member of our YouTube community here right now, every single thing we do, whenever you choose to accept risk, you have to build an argument to justify accepting that risk. And what we're talking about right now is how many pieces can we put into that argument? Are you choosing to accept risk because, hey, I came up on a scanner last night versus what's the market doing? What stocks are trading and what sectors are trading with the market? And you kind of like throw 5, 6, 7, 8 reasons in there for you to finally decide to be a buyer of an individual stock. That's when you really wake up every day expecting to make money because you put in the work. Doesn't mean you'll make money every day, but if you keep positioning yourself to make money, it's going to be because you earned the right to make money because you're just putting in a little bit extra time. Remember, earned conviction is doing a little bit of game planning, and hopefully what I'm showing you right now is helping you do that, okay? All right, so do the bears have a valid argument? Well, as of right now, yes, because we still haven't broke through that 400, right? The long-term downtrend remains intact. So remember, look both ways. Ask what the other side sees, and you'll always be ready to make good decisions. Now, this is actually a really important thing as well, and we talk about this a lot in our community. Trading the stock market successfully comes down to, number one, having an edge. Number two, having your software set up to show you that edge is there right now or it's not. But then the third part, which is built on the first two. So remember, having an edge, meaning you look at charts and say, this happens more often than not. Number two is setting up your trading platform to show you when it's there or when it's not. But then number three, which relies on the other two, is being prepared to make decisions. So I very purposely put in here, look both ways. It's very, very important. All right. And I think this is kind of an important one here too. I'm actually going to highlight that for you. Think about it. If you're looking to be a buyer of stock, what would the other side of the argument look like? And try and make an argument on both sides and be like, wow, they got a really good argument. Maybe I shouldn't be buying this. Or maybe their argument is really getting weak and now it's time to start leveling up. All right. So what's going on? The data shows inflation slowing down, but I can tell you it still costs $50 to have lunch right now. And I dare anybody to dispute that. So there's a disconnect between the numbers and the current real world. So we're battling right now the cost of things in the real world versus the inflation data pulling back. Now, here's why we called it the lunchbox, the cost of lunch indicator. Once that changes in your neighborhood, and I'm specifically talking about $50 for two people to have lunch. Once that changes and starts to come down, you're going to see it here in your local deli or diner or whatever it is before you start to see it here. But the market's kind of discounting. That's all priced in already. Once that changes in your neighborhood, it's time to belly up to the bar and start building position. So what's kind of cool about this is we're not making these decisions off of all these Armageddon headlines and the stock market crash. With the information we have in front of us right now, the stock market's kind of holding the bid. We're sitting right on the precipice of that big number, that 400 number, which is that big 2022 downtrend. And we're seeing the inflation data coming down. The Fed is talking about they're not going to raise more than what they have been doing. If by some chance on the next Fed meeting, which is the January 31st to February through February, the first end of January, early February, if by chance they even hint about slowing down from what they're doing right now, oh my word, you're going to want to have positions, which is why it's very important right now to be paying attention to those things. Okay, so remember, what we're building out is if this happens, then I plan to do this. If this happens, then that should happen next. Remember, we're not predicting, we're not forecasting, we're not even absolute in what we're saying. What we're saying is what's probably going to happen and what I definitely plan to do. Okay, very important. So let's kind of work our way down this list a little bit more. So that was breaking down the market, right? So again, that's the lunch, how much does it cost for lunch? Now you can see the breakdown, and now we're going to start to break it down a little bit more into ideas that are either in sync with the market or not in sync with the market. And we actually have two sides: stocks to buy, and then we have stocks to short sell, which are a hedging opportunity. Industrial stocks lifted the market higher the back half of 2022, and not even a question. If you can see over here, this is actually a really good visual here. If you can see here at this point in this rally, look at the diamonds and where they were significantly higher. Now, the Dow Jones Industrial Average had a much stronger rally built on the back of some of these industrial stocks, Boeing, Caterpillar, and especially GE. GE was just amazing for about, gosh, almost 4 months, and probably even looks a little bit better on the weekly chart. Look at what GE has done since September. I hope you got a piece of that because we were talking about it virtually every day. Okay. All right. So industrial stocks lifted the market higher the back half of 2022. So again, what I want you to keep thinking here is we're building an argument to accept risk. And I just want to bring this point up here as well. I'm very intentionally saying accepting risk. And this is really kind of an advanced thing. It's something, if you don't know, I had a trading firm in New York City. I had 300 people trading my capital with traders all over the world. There's a very big distinction that I taught to those people who are trading my money. There's a big difference between taking risk and accepting risk. And I'm very careful to say accepting risk is what professional traders do. Now, I can virtually guarantee everybody watching this video is going to raise their hand when I say this. Have you ever moved your stop loss just as it was about to get hit? I think everybody has ever done that. Now, the reason we do that is because we did not accept the risk before we put the trade on. So in other words, you might have taken risk by putting that trade on, but you never once considered the possibility that the trade might not work or it might not follow through. So when you take risk and don't accept or even think about the other side of the trade, comes down to your stop loss, like, maybe I'll just move it another nickel or move it another dime. And all of a sudden, what was a small loss turns into this gigantic loss. I'm talking to you who's still holding bad trades from 2022. This is different from accepting risk. Because remember, everything we're talking about right now is accepting risk in exchange for the likely profit that we're looking at. Likely is also a key word there. Not guaranteed, likely based on how we're building this argument right now. So when you accept risk, let's just throw a number out there and say, I'm willing to accept a $300 risk on this trade because of X and Y and Z and A and B and D, right? All those kind of things. When you accept risk, you are now open to the possibility that the trade might not work out, but you're willing to accept it because of how good you think the argument was for that idea. And when I say argument, it means how many reasons do you think it's going to go up in your favor? And obviously, we're talking about a bunch of that stuff today. So when you accept risk, if that stock happens to be one of the stocks that doesn't follow through, if it goes down to that stop loss area, what do? You're like, okay, before I put this trade on, I was okay with accepting that $300. I'm just going to get out and go look for another trade because that's a small expense to run my trading business, and I just go to the next one. When you understand that and actually accept it and use it in the stock market, your interaction with the stock market will completely change because now it doesn't matter what happens next because you're in total control of the downside while you're learning how to build arguments for bigger upside. That's where trading becomes fun. When you start to put those pieces together, that's where trading really becomes fun. Okay. So we're going to keep working our way through. Again, we're talking a little bit about industrial stocks kind of still being bullish, but losing their mojo. And that's what carried the entire market. So essentially right now is we're building an argument for new leadership. Okay. Financials produce solid earnings. Again, we're going to take a look at some of the financial stocks and where they've been over the last, let's say, 5 to 6 weeks. You can see that they've actually been taking off pretty big. Morgan Stanley, JP Morgan, two of the ones that I'm keeping an eye on right now. So what we're doing now is we're building an argument for new leadership. That's what we're looking for, okay? So we're looking at the financials and the XLF at this level. If it breaks through that level, that's what we're going to start to take a look at. Energy stocks creeped higher. We're going to talk about ExxonMobil and a different type of order. We're going to be looking for fuel. If fuel happens in ExxonMobil, that's going to matter. So energy stocks creeped higher, many sitting near breakout. So these are the ideas that we're looking at in that group. So if you go back to the beginning of what we talked about today and talking about fuel and the fact that it has to trade through a significant level, you can clearly see what's going on in ExxonMobil right now. Friday's volume was pretty good, not quite above average. So what we need to start seeing is above average volume and punching through this 115 level. So I want to be clear right now, going back to the first thing that we talked about today, which was the 4 types of volume. I'm looking for fuel candlestick in ExxonMobil to close above 115. That's the alert that I have set for right now. So if that alert triggers, then I look to the bottom of the chart and take a look and see how is the volume through that level. If that happens, then I'm going to start to build a position above that level, which coincides with some new all-time highs. So you can see how we're starting to not guess. There's never any guessing. It's all, if this happens, that means this, then I plan to do this. Trading can be as complicated or as simple as you want to make it. And generally speaking, the more complicated you make it, the harder it's going to be to make decisions with conviction. And hopefully what I'm showing you right now is that it can be simple, but it needs to be done every day. It doesn't need to be more than 15 to 20 minutes. If you got extra time, it could be more than that, but you need to put in the time to say what happened today and what does that mean? And the more of that kind of thought process that you put into the risk that you're willing to accept, your conviction level is going to go through the roof. Now, again, if you're in my community, you know that it takes more than just 1 or 2 days. We need to see different market conditions. And I think this is a really good example of that. If we kind of go back out to the market, we've had some really, really amazing price action over, even just going over the last 2 years, where you almost had to try hard to mess this up. And now this 2022 is actually pretty challenging. But it was an amazing contrast in really obvious order flow. And then 2022, you really needed to learn how to read the tape in different market conditions. So that's really where you start to elevate yourself in the stock market, is when you can recognize in the moment what's happening and then form a really good, if this happens, then that happens scenario. Now, if we start working together, which obviously we're doing here on YouTube, it's very important to recognize just having the strategy is not enough. You need to see, is it raining out? Is it snowing out? Is it traffic? Is the stop and go? Is it wide open? The market does the same thing as driving. You need to make decisions in the moment after you get in the car, which in trading is you put that trade on and now things change. When you see different market conditions, now you have that mental game plan to say, okay, the last time this happened, this is how I traded it. And you start to have all this experience that just kind of piles up on it after months and years in the market, where now you start to see more, even though it's the same charts. So I'm kind of excited to keep walking everybody through this, because the biggest thing I want to get across is when you understand that the market can move after you buy, you still need to make new decisions. So it's really the more decisions you can make based on what's unfolding and based on what is probably going to happen next, it becomes easier to interact with the stock market, because now it doesn't matter what happens. The only thing matters is that you flawlessly do what you planned to do. So I just want to walk you through the rest of this document. There's a lot of stuff in here for today. You can see that I walk through both rotation as well as industry groups. I also want to talk about this trade that we called out last week in Meta. You'll actually see down here, this is actually a snapshot from inside our Discord community from January 19th, which is now 4 days ago, 8 o'clock in the morning. So we put this in the game plan in the morning. You can actually see the trade of 133 buy stop in Meta. You can actually download the document. You can take a look at it. So we go further down from the market to sectors to individual industry groups. We're giving individual stocks in each of those individual groups. And then we actually kind of break it down into ideas that we are looking at right now. So hopefully this actually gives you a structure. Hopefully this gives you a structure. Now, again, I can't give you everything on a YouTube video. There's just 23 years of experience that I have that requires more time together. But hopefully, I'm at least getting you excited about the possibility that trading can be a lot simpler than maybe you're making it right now. And I dare I use the word fun when you're in control of the outcome. Look, I'll be first to tell you there's losses in trading, and I have losses too. But it's controlling those losses and understanding when everything is lining up and getting in there maybe with a little more position size, getting in there and maybe holding the trade a little bit longer. In our community, we have something called the profit maximizer, which is a very specific tactic to hold good trades longer. It becomes fun. So if you found 2022 not fun, keep watching these videos. Make sure you subscribe. And if we did a really good job today, hit that like button. I'd really appreciate it. And we actually have Elihu here, who's been in our community for a while. Good morning, Elihu. Appreciate that. So I have to head out. We got to get ready for our 8:30 game plan meeting. If you happen to be watching this later, make sure you click the link below in the description, and you can download the document that we're talking about here today, and click file and make a copy, and you can get your own copy and see how we're mapping out everything for the week. Okay. Have an awesome day, everybody. Thanks so much for joining me. Let's make it a great week. Take care now.